Happy Wednesday. It's time for another video market update. A lot's been happening, so I want to spend a few minutes just kind of going over some of the recent news and then maybe looking forward just a little. So last week the Dow Jones hit 30,000. 30,000 is a big number, and why is that? Because it took the Dow Jones 120 years to go from 0 to 20,000. It took less than 4 years to go from 20,000 to 30,000. Quite the accomplishment. Now we've basically hung around 30 or a little bit below the last week. We haven't actually closed above 30,000 since the day that it closed on November 24th. But we're still kind of hanging around. We're kind of hanging close to that number. And some people say, well, what's been the driver of not just the Dow Jones, but the S&P 500 and the NASDAQ? What's been the big driver this year and over the last few years? And one of the big drivers is what's referred to as the FANG stocks. So the FANG stocks are pretty easy. It's Facebook, it's Apple, it's Amazon, it's Netflix, and it's Google. So these 5 companies, just 5 companies, represent 15% of the market capitalization or the size of the S&P 500. So of the 500 companies, just these 5 represent 15% of the overall size, and they've had incredible growth just in the last about 5 years. You can see on this chart, hopefully you can see quite a bit of growth from these 5 companies. So the question that's come is, okay, we got to 30,000. Well, how do we get to 35,000? How do we get to 40,000? How long is that going to take? Well, certainly if I knew those answers, I would probably be doing this video on a beach somewhere, not in my office. But one thing that people have talked about and kind of thought about is maybe the next thing that could help drive the market are beach stocks. What are beach stocks, right? They're bookings, entertainment, airline, cruises and casinos and hotels. Essentially the leisure industry. And why would that be? Well, what has everyone been doing the last 8, 9, 10 months? They've been self-isolating or quarantining or been locked down, whether by choice or by state and local government. People are ready to get out. And when we get a vaccine and they start giving that to frontline workers here in the next few weeks, and hopefully by spring or summer, most of the population who wants to be and will be willing to be vaccinated, that will occur. People are going to start to travel. People are going to start to go to shows. People are going to start spending their discretionary money on entertainment. So the question is, are those stocks going to be what drives us? Maybe. I'm sure technology is still going to play a big factor, but it's very dependent on, can we get a vaccine? Is the economy still in a place where people have the discretionary money to do bookings and entertainment and go on cruises and so forth? So those are all questions that we're going to have to look at in 2021. But it's just interesting to think about. We've been driven so much by technology the last 5 years and so much by technology stocks this year. Might we see a return back to leisure? Now, if that's the case, does that mean we should run out and buy all these individual company stocks and we should be buying hotel stocks? Well, I'm not going to give anybody specific advice on this video, but generally speaking, if you have a broad, well-diversified portfolio, you may own some of that without really even having to own it just individually, right? That's the point of a broad, diversified portfolio. So that's something that we'll look for and we'll look at next year as we get closer to spring and late summer. But for now, I hope you have a great week. I hope you're preparing as we get closer to the holidays. I'll send out a newsletter next week and a video in a couple of weeks. But if you have any questions, let me know. If not, I hope you make it a great week.